Hey everyone. Today we've got some exciting and crucial updates on the US job market that you don't want to miss. November's payroll numbers are in, and they've taken an unexpected turn. From record-breaking rebounds to rising unemployment rates, there's a lot to unpack. Stay tuned to understand what this means for you, the economy, and even the Federal Reserve's next big move. And if you love staying informed about the economy, don't forget to hit that like button and subscribe to our channel for more updates like this. Payrolls grew by an impressive 227,000 in November, surpassing expectations, while the unemployment rate rose slightly to 4.2%. This rebound comes after a nearly stagnant October, largely influenced by major labor strikes and severe storms in the Southeast, as reported by the Bureau of Labor Statistics. To put things into perspective, non-farm payroll skyrocketed to 227,000 compared to the revised 36,000 in October, far exceeding the Dow Jones estimate of 214,000. And here's an interesting twist. September's numbers were also revised upward, hitting 255,000, gaining an additional 32,000 jobs. However, October's results were hit hard by Hurricane Milton and the Boeing strike. While the numbers are impressive, there's a catch. The unemployment rate edged up to 4.2%, aligning with expectations. This increase reflects a slight drop in the labor force participation rate and a shrinking overall labor force. A broader measure of unemployment, which includes discouraged workers and those in part-time roles due to economic reasons, also climbed to 7.8%. This data could significantly influence the Federal Reserve's anticipated decision to reduce interest rates later this month. Ellen Zentner, chief economic strategist at Morgan Stanley, commented, "The economy continues to generate solid job and income growth, but the rise in unemployment takes some luster off the labor market, giving the Fed justification for a December rate cut." Looking closer at job growth by sector, healthcare added a robust 54,000 positions. Leisure and hospitality followed with 53,000 new jobs. The government sector saw a solid increase of 33,000 jobs. Meanwhile, retail trade took a hit, losing 28,000 positions, as some stores delayed seasonal hiring due to a late Thanksgiving. Average hourly wages are also on the rise, climbing by 0.4% for the month and 4% year-over-year, both surpassing expectations. This is great news for workers but adds complexity to the economic picture. Following the report, stock market futures rose, and Treasury yields declined, signaling optimism among investors. As of now, traders predict an 88% probability of a quarter-point rate cut at the Fed's December 18th meeting. Lindsay Rossner of Goldman Sachs Asset Management remarked, "Today's data offers mixed signals, solid payrolls and positive revisions alongside higher unemployment. The Fed is still positioned to deliver a December rate cut." Federal Reserve Chair Jerome Powell recently emphasized that the strength of the economy allows for cautious interest rate decisions. Other Fed officials echoed similar sentiments, pointing to data-driven policies. While inflation has eased from its 40-year peak in 2022, recent trends show prices inching up again. Coupled with signs of a slowing labor market, as seen in October's jobs report, we might be witnessing a shift in economic dynamics. Household survey data also reveals a mixed bag. Employment rose by 174,000, but the labor force shrank by 193,000, pushing the participation rate down to 62.5%. Notably, the number of full-time workers fell by 111,000, and part-time employment dropped by 268,000. Finally, a critical point, the unemployment rate for black workers increased by 0.7 percentage points to 6.4%, underscoring persistent disparities in the labor market. So, what does all this mean for you and the economy? Will the Federal Reserve move forward with a December rate cut, or could these mixed signals change their plans? Let us know your thoughts in the comments below. We love hearing from you. If you found this breakdown insightful, make sure to give this video a thumbs up, hit that subscribe button, and turn on the notification bell so you don't miss our next update. Thanks for watching, and we'll see you in the next video with more insights to keep you ahead of the curve. Until then, take care and stay informed.